Football has never been richer. The World Cup is worth billions. Stadiums are bigger than ever. TV deals keep breaking records. Sponsorship money keeps growing. So why did the richest organisation in football suddenly want outside investors? That shouldn't have made sense. For decades, FIFA has been one of the most powerful and financially successful organisations in world sport. It controls the biggest tournament on the planet, signs billion-dollar commercial deals, and generates enormous revenues every World Cup cycle. So when FIFA announced plans to raise $4.2 billion from private investors, it immediately raised a simple question. Why? According to FIFA, the money would help grow football even faster around the world. More investment, more development, more opportunities for its 211 member associations. On paper, it sounded like an ambitious business plan, but football didn't see it that way. Within days, opposition began to spread. UEFA's 55 member associations unanimously rejected the proposal. Senior figures across football raised concerns about governance and transparency. The debate quickly spread beyond Europe, and just days later, FIFA abandoned the plan. Most people saw the headlines, but that's where our investigation begins. Why would the richest organisation in football suddenly need outside investors? Was this really about growing the game? Or did football see a risk that was much bigger than the money itself? Because this isn't just a story about $4.2 billion. It's a story about trust, power, and who should control football's future. This is case file number 001. Let's read the game. When this story broke, almost everyone focused on the same headline, $4.2 billion. And honestly, who wouldn't? That's enough money to stop anyone scrolling. So the conversation quickly became about the deal, how much FIFA wanted, who the investors were, whether the proposal would go ahead. But while everyone was looking at the money, I kept coming back to something else, the reaction. Let me ask you something. When was the last time you saw football agree on anything? Seriously, fans argue every weekend. Managers disagree. Clubs fight over rules. Leagues protect their own interests. FIFA and UEFA have spent years pulling in different directions. Disagreement is part of football. It's what makes the game so passionate. So when I saw some of the biggest voices in football suddenly raising the same concerns, I stopped thinking this was just another business story. Because this wasn't one angry club or one unhappy league. UEFA's 55 member associations unanimously rejected the proposal. CONCACAF leadership publicly raised concerns about governance and transparency. Questions spread across football, not just about the money, but about what the proposal could mean for the future of the game. That made me stop. And maybe it should make us stop too. Because here's something I couldn't get out of my head. If FIFA genuinely believed this proposal would create more opportunities for football, what were so many experienced football leaders seeing that the rest of us weren't? Think about that for a second. Not whether they were right, not whether they were wrong, just this. What made so many people from different parts of football reach the same conclusion? Because here's the thing, the $4.2 billion proposal didn't fail because football suddenly became afraid of money. Football has always welcomed investment. Clubs have owners, stadiums have sponsors, broadcasters pay billions for TV rights. Money has always been part of the game. So maybe money was never the real issue. Maybe the real debate wasn't about the money itself. Maybe it was about what that money could mean for the future of football. And once I started looking at the story that way, everything changed. Because before we can understand why football reacted the way it did, we first need to understand one thing. How did FIFA become powerful enough to even ask this question? To understand that, we have to go back to the beginning. To understand why this proposal shocked so many people, we first need to understand who FIFA had become. Today, it's easy to think of FIFA as simply the organisation that runs the World Cup. But FIFA is much more than a tournament organiser. It sits at the centre of the world's biggest sport. Every 4 years, billions of people watch the World Cup. Broadcasters compete for the rights to show it. Global brands compete to sponsor it. Host nations spend billions preparing for it. Think about that for a moment. The World Cup isn't just a football tournament anymore. It's one of the biggest sporting events on Earth. And FIFA sits right at the centre of it. Every ticket sold, every broadcast deal, every global sponsorship, every World Cup leaves FIFA in an even stronger position than before. Over time, football didn't just grow. It became a global business. And as football grew, so did FIFA. Year after year, tournament after tournament, FIFA built one of the most valuable organisations in world sport. Its own financial reports show billions of dollars generated every World Cup cycle, allowing it to fund competitions, operations, and development programmes across all 211 member associations. Now, put yourself in FIFA's position. You control the biggest tournament in football. You generate billions of dollars. You have commercial partners from around the world, and you're preparing for the biggest World Cup in history. So let me ask you something. If you were already sitting on one of the most valuable sporting events on the planet, would your first thought be to bring in outside investors? Maybe, maybe not. But that's exactly why this story became so controversial. Because this wasn't a struggling organisation trying to survive. It wasn't a company running out of money. It was one of the most powerful organisations in world sport, looking for even more capital. And that brings us back to the question we've been chasing since the beginning. What opportunity did FIFA believe it was seeing that so many others didn't? Because if we're going to judge this proposal fairly, we first need to understand exactly what FIFA was asking football to accept. And once you read the proposal itself, you'll understand why this debate became much bigger than $4.2 billion. And that's exactly what we're investigating. Imagine you're sitting in the room when this proposal was first presented. No headlines, no social media, no opinions, just the document. Because if we're going to judge what happened, we should first understand what FIFA was actually asking for. Here's what was actually on the table. FIFA wanted to create a new company called FIFA Forward Enterprise. This new company would bring together FIFA's commercial and event operations. Then, FIFA would sell a minority stake in that company to carefully selected long-term investors. Not control, not ownership of football, a minority investment. According to FIFA, the organization would remain fully in charge of football. The rules wouldn't change, the World Cup wouldn't be sold, investors wouldn't decide who hosts tournaments or who wins elections. On paper, FIFA said football would keep control. And the money? Up to $4.2 billion. Money, FIFA said, would be reinvested into football around the world, helping fund development projects and increasing support for all 211 member associations. Now let me ask you something. If someone handed you this proposal without telling you FIFA wrote it, there's a good chance you'd think it sounded sensible. Let's be honest. If all you heard was more money for football, more funding for smaller nations, FIFA keeps control, investors own only a minority stake, wouldn't you at least listen? Honestly, I would. And that's important, because if we're going to investigate this story fairly, we have to admit something. On paper, FIFA's argument was a strong one. So why did football reject it? Maybe the problem wasn't what the proposal promised. Maybe it was what football believed the proposal could eventually become. The most important part of the proposal wasn't what it said, it was what it didn't say. Because once outside investors become part of football's biggest commercial competition, where does that story end? Could future investors ask for more influence? Could commercial priorities slowly outweigh football priorities? Or were those fears completely overblown? Those were the questions football's leaders were asking, and they're the questions we should be asking too. Because this wasn't simply a debate about $4.2 billion, it was a debate about where football draws the line. If the proposal sounded reasonable, why did it collapse so quickly? Because if you remember where we left the story, the proposal actually sounded reasonable. So something didn't add up. This wasn't a debate between fans on social media. These were the people responsible for running football. And almost immediately, the alarm bells started ringing. The strongest response came from UEFA. Not after weeks of debate, not after months of consultation, almost immediately. All 55 member associations stood together and unanimously rejected the proposal. And they didn't just reject it, they drew a line. UEFA said, the World Cup is not for sale. It also warned that the soul and governance of football are not assets to trade. Think about that for a second. Football can't even agree on the offside rule. But on this, every single UEFA member reached the same conclusion. That doesn't automatically mean they were right, but it does mean something made them deeply uncomfortable. Then the pressure spread. CONCACAF, representing 41 member associations, didn't simply question the proposal itself. It questioned how the proposal had been developed. Its statement raised concerns about the lack of consultation, due process, and proper governance. Not just the proposal, the process behind it. Notice something. Neither UEFA nor CONCACAF focused only on the money.
They kept coming back to the same words. Governance, transparency, stewardship. That caught my attention, because those aren't financial words. They're trust words. And maybe that's where this story changes. Imagine you're responsible for protecting the future of football. You might completely support investing more money into the game. But what if accepting that money also meant setting a precedent? Not today, not next year, but 10 or 20 years from now. Would football still be making every important decision? Or would outside investors eventually expect a bigger voice? To be clear, nobody could say with certainty that would happen. FIFA insisted it would retain full control and that investors would hold only minority, non-controlling interests. But football's leaders weren't only judging what the proposal was, they were asking what it could become. And that's an important difference, because history shows that some of the biggest changes in sport don't happen overnight. They happen one decision at a time. One exception becomes a precedent. One precedent becomes the new normal. So perhaps the real battle was never about $4.2 billion. It was about deciding where football should draw its line. And that's when I realised, to understand this story, we could no longer look only at the proposal. We had to start following the people behind it. Because sometimes, if you want to understand a decision, you have to understand who was standing to benefit from it. And that's exactly where this investigation takes its next turn. By now, we knew three things. FIFA believed the proposal would help football grow. UEFA believed it crossed the line. And football's biggest organisations weren't arguing about the amount of money. They were arguing about what the deal could mean. So the next question almost asked itself. Who stood to benefit if this proposal had gone ahead? Let's start with FIFA. From FIFA's perspective, the proposal offered something every organisation wants. Capital. Not because FIFA was running out of money, but because access to billions of dollars today could allow it to invest sooner rather than waiting for future World Cup revenues. That was FIFA's argument. Accelerate investment now, grow football faster. On paper,
paper, that's a perfectly reasonable business strategy. Now let's look at the other side. One of the investment groups linked to the proposal was Thrive Eternal, a new long-term investment company launched in 2026 by Joshua Kushner. Its purpose wasn't to buy struggling businesses. It was created to invest in what it calls iconic, long-lasting franchises and cultural institutions. From that perspective, it's not difficult to understand why football attracted interest. The World Cup is already one of the biggest sporting events on earth. Its audiences continue to grow. Its commercial value continues to rise. For a long-term investor, that looks like one of the most valuable assets in global sport. Reports also indicated that FIFA was working with JP Morgan on the proposed transaction, with Thrive Eternal expected to become the lead investor in FIFA Forward Enterprise, the new company that would hold FIFA's commercial rights. And this is where I want to pause, because it's very easy to get distracted by famous names. Joshua Kushner, JP Morgan, political connections. Those details grab headlines, but I don't think they're the most important part of this story. The more important question is this: why were sophisticated investors interested in football in the first place? The answer is surprisingly simple, because football isn't just a sport anymore. It's one of the most valuable entertainment businesses in the world. And if you believe the World Cup will continue growing over the next 20 years, owning even a small part of its commercial future could become an incredibly valuable investment. So maybe investors weren't seeing football differently from everyone else. Maybe they were seeing exactly what FIFA was seeing, an opportunity. And that's where the story becomes much more interesting. Because investors aren't villains. FIFA isn't automatically wrong, and UEFA isn't automatically right. That's not what this investigation is about. It's about incentives. Investors naturally ask, how can this asset become more valuable? Football's governing bodies have to ask something different. What's best for the game? Most of the time, those two questions might lead to the same answer, but not always. And when they don't, who feels the consequences? Usually, the fans. The people who buy the tickets, watch every weekend, travel across countries, pass the game down to the next generation. Because if commercial priorities and football priorities ever begin pulling in different directions, those are the people most likely to feel it first. And maybe that's what football's leaders believed they were protecting all along. Whether they were right or whether they overreacted is something every fan can decide for themselves. But one thing is becoming clear. This investigation is no longer about a $4.2 billion proposal. It's about a much bigger question. Can football welcome more investment without changing what made people fall in love with it in the first place? Because that's the question that still hasn't been answered. When we started this investigation, it looked like a story about $4.2 billion. Now, it doesn't. We discovered that FIFA wasn't trying to save itself. We discovered that the proposal wasn't obviously unreasonable. We discovered that UEFA's biggest concerns weren't simply financial. And we discovered that investors and football's governing bodies weren't asking the same question. One was asking, how do we create more value? The other was asking, what's best for football? Maybe those two questions can exist together. Maybe they can't. History hasn't answered that yet. But this investigation uncovered something I didn't expect. The biggest battle wasn't over money. It was over trust. Trust that football's biggest competition would always belong to football. Trust that decisions about the game's future would stay in the hands of the people responsible for protecting it. And trust that once one line is crossed, another line doesn't quietly follow. Maybe UEFA was right to be cautious. Maybe FIFA was right to think bigger. Maybe both sides genuinely believed they were acting in football's best interests. And that's what makes this story so fascinating. Because the best investigations don't always end by telling you who was right. Sometimes, they leave you asking a better question. Football will keep changing. More money will enter the game. New investors will arrive. Technology will reshape how football is played, watched, and sold. Those changes aren't coming. They're already here. Football has never been richer. The real question is whether it can become even richer without becoming something else. Because maybe the future of football won't be decided by one proposal. It will be decided by the lines football refuses to cross. This proposal is over. FIFA withdrew it, but the questions it raised are far from over. This was case file number 001. Status closed. New questions open. Now it's your turn. If you had one vote, would you have approved FIFA's proposal? Tell us why in the comments. And if you enjoy football investigations that go beyond the headlines, subscribe to Read the Game. Case file number 002 is already open. We'll investigate it together.